Hey everyone, and thank you for joining us. We're excited to welcome Ryan Wilday, who has over 17 years of experience trading equities, futures, and options. He began trading cryptocurrencies in 2013, and today he melts his deep knowledge of the cryptocurrency market with Elliott wave theory. Mr. Wilday, thanks for being here. The floor is yours.
Thank you. Hey, everyone. So today we're going to talk about or ask the question, does BIDO belong in your portfolio? And if you don't know what BIDO is, that's the symbol for the ProShares Bitcoin Strategy ETF, which has just been available since November last year. As always, let's see, let me get, okay, I have a little bit of issue on my computer. We'll see how it goes. If you need a copy of this presentation, I've got a QR code for you on the right. If you're old school, you can go to that link. And if you want a free trial to the service that I offer at Elliott Wave Trader, which is basically I offer a daily report on Bitcoin, Ether, and ongoing coverage of many cryptos. It's kind of oriented towards traders, but it also has a lot for the long term. You can check that out, and we don't take credit cards too. So if it's not for you, just let it lapse. We won't give you spam calls or anything like that. You know what I do. I think I got a pretty good introduction. Been running the service on Elliott Wave Trader since 2017. And then a few of my history. I don't want to belabor this too much, but if you do a quick note of some of my calls in Bitcoin in the past, you'll note that I'm calling 800, 100,000. It's just been very slow happening, but we've still got a setup for that to happen. So if you want to peruse those calls, go ahead, and they are verifiable if you want to kind of dive into the web. And then lastly, I don't want to read through disclaimers, but again, I am asking the question whether BIDO belongs to portfolio, but greater than that, whether crypto belongs to your portfolio. And it's a very volatile asset class, so just make sure you do your research, get informed on the volatility involved, and make sure it's right for you. This is more of an educational a presentation versus being a recommendation. And then just for background, all my work is based on the Elliott wave theory, as was shared, and you can actually get a quick read on the theory itself with the Wikipedia page. But basically, we believe that, well, we know that all markets move in trends that are built by 5 waves and then correct in 3 waves. So you can kind of see a fractal nature to the market, and even this 1, 2 precludes a larger 3, 4, and 5. This is not a specific chart, but basically shows the fractal nature of the way markets move. And on top of that, there's a mathematical relationship to each from one wave to another, and that allows us to identify pivots for you know, trends, entries, exits, whatnot. And then finally, I always like to start my presentations or at least get a hint of my forecast in Bitcoin. But right now, we are kind of plumbing the lows within a larger, what I call wave 4 correction. My support level is 24K, so this is my point of view, as long as 24K is not breached and sustained. And I expect a run to the 88K to 115K region in this top of this 3rd wave. So if you've seen my presentations in the past, you're pretty familiar with this chart as I've shared it. I was in Vegas recently at Money Show, and the question right now is whether we bottom in this 4th wave. Ideally, I'd like to see a run down to 30K, but it is definitely fighting that right now, and over 45K, I think that we're off and running. All right. So the core question in this presentation is, if interested in having Bitcoin in your stock portfolio, and given the context of my forecast in Bitcoin, at least I think you can consider it. Should you use BIDO, the ProShares Bitcoin Strategy ETF, or should you continue to use other funds like GBTC, the Grayscale Investment Trust? You know, I focus on GBTC classically in the crypto service just because it's been around. I trust the company in terms of their custody. I have not gotten too deep into other options like OBTC. The premium's been kind of out of whack on that one. So I've really focused here because it's really been a mainstay. But now that we've got BIDO as an option, this has, you know, and it's more of a it's a ETF versus being an investment trust, which I'll talk about more deeply. It has me really consider moving over, and honestly, I have started to move over to BIDO versus GBTC. Right now, currently, I hold GBTC and options in BIDO, but I'll talk about how I'm making that transition a little bit as we go. So let's understand the difference. So the GBTC is not an ETF, and that's often been misunderstood. It is an investment trust. It holds real Bitcoin in the fund. The company Grayscale holds it in secure secure wallets, and the shares are not bought and sold to correct net asset value. That means that it trades at a premium or discount, which fluctuates, and basically right now it's at a deep discount. It's kind of like a closed-end fund where the shares do not, the float does not flex. Basically when you have an ETF, the company is required to manage NAV by issuing and basically taking shares off the market, doing both to correct that NAV. And that is not the case with Grayscale, which has caused the Grayscale Investment Trust, which has caused that premium to discount fluctuation. Now, BIDO, I should finish the sentence. It's issued by ProShares. It's the ProShare Bitcoin Strategy ETF. It holds no real Bitcoin. Okay, this is really important. It holds Bitcoin futures which trade on the Chicago Mercantile Exchange, or CME for short. The shares are bought and sold to pin value to NAV. So it is not, again, that NAV, the net asset value, is not based on Bitcoin itself. It is based on the futures that are held within the fund. Okay, very important difference. Okay, and we're going to elaborate on that. We're going to look under the hood here at BIDO first. BIDO holds, again, as I said, Bitcoin futures, not spot the coin itself. Those futures, and this is going to get a little heady for those that are not familiar with futures, but those futures typically trade in contango. That means the front contract is cheaper than the next contract. Okay, so right now we're trading the March contract. I think it's is it later this week or next week? The March contract. I've already rolled mine, but the March contract trades at a slight discount to the what's the next month? April contract. The fund must roll futures before they expire. Again, it's the last week of each month. And when in contango, the fund sells the cheapest contract in the term structure for the next more expensive one. Okay, and that causes the what's called roll decay in the fund, because it's basically selling a cheap asset and buying more expensive, but essentially essentially the same kind of spot underlying. Okay, so that causes over time a decay in the fund. Here's just an example, and this is really, I took this snapshot of H is basically March, J is April, K is May, M is June. So these are kind of this is basically a snapshot of the term structure in the futures. Okay, and you can see that they slightly get more expensive. This is actually fairly tight right now. This amount of contango will fluctuate. Every once in a while it goes into backwardation where the front contract gets cheaper, but that only happens on strong declines in the Bitcoin price and only happens briefly. So most of the time, the Bitcoin futures are trading in contango. Again, that as you go later in months, the contracts get more expensive. Okay, so that's a quick snapshot. And honestly, the gap is pretty tight right now. I've seen it where it's $100 to $300 more expensive for the next contract. This is only roughly about 20 to 30 bucks each one. And this one right now, due to illiquidity, basically kind of tied up. But if there was some more liquidity, you'd see a slight variation in the last two in this snapshot. If you look at what that's done to the fund since it's a release, so this is where the November release, Bitcoin has been in decline since then. It's basically what I call the top of the B wave, and we've been declining the C wave correction. And the orange line is Bitcoin, and the candles are BIDO. And at the end of this, they were pretty, you can see that they're pretty tight. And I indexed them. This is not an actual price. I indexed them to 100 so that we can, basically as Bitcoin is, tens of thousands of dollars, we need to kind of level set them in terms of percentile. And that's why I indexed to 100. And if you look at it, there's this chart ended, I think it was last Friday that I took the snapshot, 64.97, and BIDO's at 63.02. That means that there is almost a 2% difference or 2% decay over the time frame from November is like a little bit more than 6 months, right? From November to March since it was released. Okay, so that's 2% decay. And basically that's what you're facing when you are owning a fund that has futures. I have to say, I don't want to spend my time bashing the SEC, but I think that the SEC, there's a lot of reasons they stated for not approving a spot Bitcoin ETF and rather went towards its futures. But I think honestly, this was the worst thing they could ever do for retail investors who don't understand this. And they, most retail investors would just see Bitcoin ETF. Yes, I want that in my portfolio. I'm going to buy it and not understand what's under the hood. But I'm telling you right here, so that you are educated what is under the hood in the BIDO ETF. Okay. Under the hood in GBTC, again, as I said, it trades at a premium to the Bitcoin it holds until March 2021, and it has traded ever since in a discount. Okay, so if you look at a chart here, you can see how it's been in a premium since it was released in 2017, and then once it crossed over 2021, it started trading discount. There's lots of reasons and debates for why it made that cross and why it hasn't been able to get back over premium. But it's kind of a problem because honestly, it's continued to get worse in terms of its discount. So there's sort of a gamble in GBTC. Right now, the GBTC, Grayscale has an application with the SEC to convert this fund to an ETF. There's a pretty big gamble here because if you own it, and I do own some shares of GBTC, once it's approved as an ETF, it should instantly go to par. Okay, that 25% discount or more that it's trading at right now should be instantly wiped away as those shares are sort of level set with the net asset value of the Bitcoin that's held within. The problem with that gamble is the SEC approval is very unlikely. And they've said, again, I can go into that. That's almost a presentation in itself to do its justice, why the SEC will not likely approve it. Okay. So again, you basically, we've got this trade-off. You've got BIDO, which is, honestly, kind of a poor fund for retailers in that it's got this decay that's built into it. Okay, and on top of that, a management fee, which I can't remember what it is, but I think it's about 0.5%. Then you got GBTC, which has a higher management fee. I think it's 1.5 or 2, I don't recall, but it also has this discount, which may continue in perpetuity and potentially even get worse, right? So you've got but you've got this interesting gamble with the GBTC shares. So to be honest, uneducated retailers are kind of in a pinch if they want to put Bitcoin in the portfolio. Honestly, I always say to everyone, hey, if you want Bitcoin, buy Bitcoin. But if you want to play in an IRA, which I do, or you want to just have your stock portfolio diversified, which I do as well, then these are the options that you need to consider. Okay? It's really the only option you get right now in the U.S. market. If you're Canadian, you've got spot ETFs. And sorry if you showed up my presentation, it applies to you less because you're not in that pinch. Okay. So again, BIDO, GBTC, take your pick, but I'm going to offer a third option technically in quotes. That third option is to sell BIDO options to outrun roll decay. I'm going to give a disclaimer. I have started to deploy the strategy in my own portfolio while holding GBTC, but I only have a few months into it. So far, so good. And in fact, I haven't been called into any BIDO shares. I've only owned options. But I do think by looking at this and analyzing this, I do think it's a good strategy going forward. I'll elaborate on it, but I just want to give you this disclaimer. Okay. And that option basically is you have an option when you enter BIDO either to just buy the shares or done what I've done is sell at the money put options. And if you're not familiar with options, I'm giving you the most basic option strategy that exists, and it really is not hard to learn. I'm not giving you any, and honestly, I'm not giving you any more increase in risk in your portfolio by using options this way, except as long as you have the cash to cover your put options. Okay, so if you have questions about that, we can try to hit that at the end, what that means. I can explain very briefly, but honestly, I would go to YouTube videos and just type in cash covered put options, and you'll get an explanation, as well as covered call option strategies, and you'll get an explanation on both of these strategies. Okay, but anyway, we're going to sell it at the money put options to enter the BIDO shares. The risk there, of course, is that you don't get the BIDO shares if it doesn't drop below your strike price. If you're familiar with it, you know what I mean. This is but even then, if it doesn't, then you've got a profitable trade. And then once in BIDO options, we would sell covered calls using 10 to 15 delta call options monthly to battle roll decay. Okay, when I say 10 to 15 delta call options, if you've got an option platform, it'll give you your deltas. Usually it's expressed as 0.1 to 0.15. If you've been in options a long time, you usually say 10 to 15 deltas, which is the same thing as what your platform will tell you for 0.1 to 0.15. Okay, and there's also kind of a link between delta and probability. If you're selling a 10 delta call option, there's a tendency, and I want to express it, tendency for there to be a 10% probability for the strike price to cross that level. Sorry, the price to cross that strike price, and therefore you get called out of your shares. Okay, that's not a very tight It's very questionable to say that's probability, but there tends to be. And so what I'm trying to do here is basically sell call options kind of far enough out of the money so that you don't get called away, your shares called away. So I did a little bit of math. And as of writing, the BIDO implied volatility is kind of in the mid-range, which means most of the time you're going to get these prices or better, sometimes worse. But basically a 30-day at the money put option right now sells at 7.5% value of the shares. Okay, so even right there, as I showed in my chart earlier, BIDO decayed about 2% versus Bitcoin in roughly about 6 months. So that would be about 4% annualized decay, which is, again, is very heavy in an investment, right? And especially heavy in a very volatile asset. But here you have, if you were to enter by selling a put option, you would have made up 7.5% right off the bat. Okay, so basically more than the decay for a whole entire year. And then once entered, basically 14, let's see, I put 14 delta, I think it meant 15 delta call options, a little bit of typo there, but they basically sold at 1.2%. No, I think it was 14, sorry, it was 14 delta because I didn't have a 15 at the time of writing. There wasn't one available, but it always depends on the price of the underlying. But basically they sell at 1.2% of share value. So if you were to do that every month at 30 days, every month, once you own the shares, you get back about 14.4%, which basically outperforms decay. Okay. There's a lot of slack in this. You don't know if you're going to get 7.5%. You don't know if you're going to be able to sell, profitably sell call options at strike prices where it'd be profitable to you, because you never want to sell call option where you would put your shares at a loss unless you're comfortable with the rolling process. But so I'm getting a lot of slack in these numbers versus, basically 14.4% is a lot of slack versus the 4% APR that you're trying to make up in the roll decay of BIDO. Okay, so I hope that makes sense. And again, I expect a lot of you that are new to options to ask a lot of questions at the end, and that's fine. We'll do our best to explain the strategy further. Okay, but it's pretty simple that way. Sell put options to enter for 7.5% shares, more or less, and then to monthly sell call options once in the shares for a 1.2% return per 30 days. Again, give or take 14.4% APR over the period of a year. Again, it does require that you can sell those call options at a strike price that would be a profitable exit for you should it get crossed and exercised or assigned. Okay. Just real quick, I want to give you some insight on implied volatility in BIDO. And this holds true. I have traded options in Bitcoin for a long time in the spot market. And so these implied volatility numbers actually have held true for years. So even though BIDO has been around for only 6 months, it's sort of normal that every underlying every fund or option that's related to an underlying is going to have the same implied volatility, whether you're talking about gold futures or GLD, SPX or SPY, BIDO or Bitcoin, you're going to have the same implied volatility behavior. It has to be that way, otherwise there's arbitrage opportunities. Okay, the market's going to kind of knock that arbitrage out by level setting all the implied volatilities of all the options over all the underlyings. Okay, I'm probably over everyone's head to a degree, but basically, if you want me to elaborate, let me know. But basically, the implied volatility in Bitcoin underlyings has this range typically of 100%. And I'm using, this is a Thinkorswim chart, and you can see 0.95 here, which is almost 100%. And then on the bottom, we have 0.6. So basically, roughly between 100% and 65% implied volatility is basically the yearly fluctuation you typically get. There's also a tendency for Bitcoin options to be sort of double-sided versus like the equity markets tend to have peak volatility during downside. Bitcoin and metals tend to be during upside. Well, Bitcoin tends to be both-sided. Peak volatility comes in either direction. And so that peak volatility, again, is going to be around 100%. And you can see that we've got one big spike of implied volatility during the bottom in earlier this year in January. And so I often use 100% implied volatility as kind of a bottomish signal, or sorry, a turn signal, whether it be a peak in the market or a trough in the market. Okay, And then as volatility really kind of slides, realized volatility kind of slides, implied volatility tends to kind of drop towards 60%. So I gave you numbers that, while implied volatility for all those APRs I gave you, we're right about smack dab in the middle. Obviously, you don't want to sell a lot of options so much when implied volatility is closer to 60, because you're kind of basically selling undervalued options. And then, if you've got implied volatility around 100%, sell those options at the same time, get ready for a market turn. There's a pretty good tendency for that. All right. So that's it. I know it's a pretty heady strategy, so throw your questions my way, and I can elaborate on any of the concepts. I'll do my best for those that are new to option selling as best I possibly can, but I'll tell you what to search for again on YouTube. And then I'm going to sit my presentation back on those QR codes if you want to pick up those and check out the service, or just go to the links. So let me just kind of back up to there while you fire questions at me.
All right. Well, thank you very much. Our first question is, what is the best address to buy Bitcoin directly?
Address, I assume you mean like exchange URL when you mean address. For beginners, I usually point people towards Coinbase because it's the most easiest to use. In terms of if you're familiar with like more of a trading site or comfortable diving into that, my favorite exchange on right now in the United States is ftx.us. If you may be familiar with the brand because they just renamed, I think it's the Miami Stadium. They own the naming rights. So they're kind of going gangbusters in the United States, growing immensely, and it's a great exchange that I use. But it's a bit more of a trading platform that if you're not used to advanced platforms, it might be easier just to use Coinbase. It's just the fees on Coinbase are a little higher. Coinbase.com or ftx.us.
All right, thank you. What is your current analysis on Voyager and Coinbase that trade Bitcoins?
If you mean the stock, it's a little bit, I can't jump to my analysis because I need charts. I think if you're familiar with my past presentation on Voyager, again, I'm assuming you mean the stock price. I have a target somewhere in the 100 region, 90 to 100 region. I just don't have the chart offhand. If you mean analysis of the app itself, I do use that app. I think it's pretty good, and I use it fairly often. It's a very convenient mobile app for getting some quick money out of my bank account and buying coins on the fly. So I might use it during travel.
Alrighty, thank you. And do you mind sharing your thoughts on Ethereum moving forward?
Target is in the 10K region. Again, when you ask me for charts, I run hundreds of charts on the service. So if you're asking me for charts while I'm looking at other charts on a presentation, it's a bit tough for me. I think the target's around like 9K to 10K over the next, as long as this wave off this bottom gets going. So it might be in the next year or two when we finally get there.
And do you have an opinion on the Galaxy Fund, GLXY?
That's a stock, right? Talking about you talking about Galaxy Digital, the company, and it's a stock basically, not really so much an exchange. I have target. I actually don't know my target offhand, but in my last presentation, Money Show, I talked about my target. So if that's available on YouTube, you can grab it. I just don't have it offhand. Again, you're asking me about charts. I don't have it offhand right here.
All right. And then do you think it's safer to own Bitcoin on a broker such as TradeStation?
I am very much a proponent of custodying your Bitcoin off exchange, or at least a certain amount of your holdings. So basically, I've got holdings for the long term, and I got holdings I trade. Anything that I'm not trading, I take off the exchange for security reasons. And so I custody it myself. I keep my private keys. I have a security regimen. I can't go into that here because that's a long regimen, but I've got a document. In fact, I've got a masterclass coming. Let's see, in Vegas. I can't remember the date for Money Show on getting into Bitcoin, and I talk about security in that. If you join the service, I've got a document that kind of explains my security regimen as clearly as possible.
Alrighty, thank you. The Money Show Las Vegas is May 9th through the 11th for the record. But also, do you mind sharing your thoughts on the biggest risks for cryptocurrencies in the weeks and months ahead?
Volatility. If you're talking about existential risk, we've just got an executive order that says that basically stated that crypto is a key part of our economy. I don't know if you guys read the Biden. Everyone was actually really surprised because honestly, the Biden administration has been quite threatening in terms of cryptocurrency. But this executive order, which basically just sent agencies out there to analyze their place in the crypto world, but the open statements were that crypto is an important part of our economy now. And especially after Americans, I assume this is the root of the question because I get to ask this question every presentation. But basically, in America, we've got, I think it's like 15% or 10% or 15% of the society owning crypto, and on top of that, it is billions of dollars. So it's immense a risk to the economy to say, okay, all of a sudden that's outlawed. But in terms of the average user, the risk is, of course, your own security and the volatility itself, and that risk that you're just going to sell at the bottom and buy at the top, which so many retail investors they unfortunately do. At the same time, I would say be careful about which crypto you're owning. I always say if you're not going to pay attention to the market and follow the projects and understand the technical analysis, just buy Bitcoin, make it easy on yourself. So that you're not buying some cruddy coin that's going to go away, because all of the altcoins go through cycles where they kind of disappear after each bull market. Some of them disappear, some of them last, and if you don't know what to buy, then you're kind of in trouble.
Alrighty, and do you have an opinion on the Bitcoin miners?
Yeah, I mean, again, that's something I cover in the service. There's a few that I favor that go on a weekly altcoin and crypto equity report that I issue, and the last one was last night. Which again, you're welcome to take a trial and grab those charts, and then if the service isn't for you, don't worry about it. But giving you a specific opinion on them from here without my charts in front of me is just not possible.
And what do you think about staking BTC and ETH?
I don't stake because I just make more trading. Staking is pretty good. Like if you're going to hold for say the next 6 months, you might as well get a little extra return. I do have some long-term holdings in some of the interest-bearing accounts. Unfortunately, those are now shut down for Americans until they register with SEC, but I'm grandfathered in, so I'm getting interest on some of my Bitcoin. I mean, I think staking is great if you're going to hold for a while. I just don't do much of it personally because the volatility, like I make more money off the volatility opportunities versus staking. And then of course, if you're staking for say I think like Polkadot is one of the biggest staking returns, 12%. Well, Polkadot can go 12% down in a day. Like it's the volatility. You're not going to make up for the volatility if you don't know when to buy and sell by staking. So you can't trade it it's going to make you money anyway, despite the volatility, right? You can get undermined quite fast in the market.
All right. Well, thank you. That's all the questions that we have for today, but I appreciate your time. It was a fascinating discussion.
Great. All right, guys. Thank you.
And thanks again.
See me in Vegas if you have time.
That's right. We'll be at Bally's Paris, Las Vegas, May 9th through the 11th.